Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators. Previously, we've done episode 1 on gold, which is a commodity because everyone likes gold, right? You can check it out if you haven't yet. In episode 2, we went over OP, Optimism, a crypto coin or token. And for today, we've got episode 3 on AUDUSD Forex pair as per your request. Many of you asked me to zoom into lower time frames like M1, M5. You know I don't. I personally focus on M30 and above as a day to swing trading, but I'll try my best as per your request to zoom in as much as possible and give you some practical examples. But of course, whatever you see here, it depends on your trading plan, on what you will integrate within this trading plan and if it suits you or not. At any time, feel free to ask any questions in the comment sections below, or feel free to request any analysis, any instrument, any asset in the comment section below for the next episodes. It can be an index like US 500, it can be a stock, Apple, Nvidia, and so on. If you don't have a trading plan yet, you can join our family on RichTL.com. I already have it here on our chart. That's my baby to help us make objective technical analysis. Whatever you do, even if you don't apply my strategies, you can still use it to make your trading style and strategies objective. So before I start, I always try to look left and see how well RichTL is behaving, or the market structure in general if you are not using RichTL. So you can clearly see that it has been doing great after breaking below this low. We have been bearish and we haven't broken above a high since then until here. We've broken above a high, so now we are bullish. And then price started to make higher highs and higher lows. And after breaking below this last low, we have been bearish, right? And now, as you see, we've broken above a high. Now we are bullish, and then price formed a big head and shoulders, broke it downward, and we have been bearish since then. We have been making low lows and low highs. Let me delete these ones to keep the chart clean. That's it. We have been bearish, making low lows and lower highs. We haven't broken above this. It's just a wick, low lows, and so on. And lately, we failed to make a low low, instead made a higher low. So we are most probably within a big range. And for the bulls to take over and to shift the momentum again, just like what happened here, bullish, here, bullish, and so on, we need to see a break above this high. Once we break it upward, we'll be long-term bullish. Of course, from a long-term perspective, this is weekly chart. This is where I focus on long-term or the big picture, weekly and monthly. For daily and H4 is the structure, or in the middle between the big rejection, big picture, and the trigger time frames like M30 H1 or the execution ones. So it's very important to start all the way from the higher time frames to the lower time frames, and no matter how much you want to zoom in, always check. It takes like a minute and you do it only once for a couple of years, right? Because you draw something on weekly and monthly, chances are that it will not change for a couple of weeks. So do invest a second or a minute, draw it, know where you are before zooming into lower time frame. That's what I always do from a blank new chart. So I will not bother to draw support and resistance because we don't really have any right there. So I'll focus on the current price action, but as a practical example, here we go. We've got multiple rejections here, previously as support, third resistance, third support, and lately acting as a resistance zone. That is from a big rejection key level perspective. We also have one there, multiple rejections from this entire zone. Of course, it's a zone and not a level, so price might undershoot it or overshoot it a little bit. So don't take action solely on support and resistance. You know what to do, right? Wait for a rejection, wait for a confirmation around it before you confirm this reversal. So this is basically it. Let's focus on the current price action more. We have been stuck inside this big range, right? And we have been bearish, as mentioned previously. So I want to try and cover this overall bearish movement. We've got this trend line here that we've got a low low and a lower high, and we are trying to engulf this movement. And we also have this low one as we have higher lows, right? So it's like a big symmetrical triangle. So as we approach the low bounds, we'll be looking for what? For buy setups. And as we approach the upper bound again, because we already rejected it, as per my last analysis on TradingView, rejected the zone, and we are currently pushing lower. This is where we are from a big long-term perspective. Next, let's zoom into daily time frame. We can't really add much. What we can see is that we have been overall inside a range, just like this. AUDUSD likes to do such big ranges. So we had the push lower previously, and then we pushed higher, we pushed lower, and then we pushed higher, and then we had this big bearish movement. We might be seeing this big bearish movement. But if you look closely to the current price action, we can see that we have been stuck inside this range. We can see it even better if you zoom into daily time frame, to H4 time frame. But for now, what we clearly see is that we are inside this smaller range, but if you push a little bit higher, we'll be around the upper bound of the range, which would be the intersection of the upper trend line with the upper bound of this big range. And I forgot to show you as well that on weekly time frame, in case you wondered, you can also go for this one, and you can also go for multiple ones like a channel. But I went for this one because it's the most recent, most close intersection to that might provide us with an setup very soon. But of course, I try to keep my chart clean, but if you are drawing everything at once, you can also go for this big range as a horizontal one, or draw multiple stuff as well. But for now, I'm focusing on this big range to show you a practical example on how clean it is. So as mentioned previously, if you zoom into H4 time frame, you can see that we have been stuck inside this big range. And I've been personally trading this range for a while. Here we go. We have been within this big zone. And previously, I've looked for shorts here, for long setups here. This was from last week, and this is also from last, but I didn't catch this one because it was during the news, CPI, FOMC, and we are currently here around the lower bound of this range again. So what we are doing is, we don't really have anything here holding it back, right? The next rejection would be here around this demand zone, which is also a structure, multiple rejections from the zone. Okay, so if you break it downward, in this case, yes, we'll be looking for shorts for sell setups as we retest it. But for now, as long as this range holds, as long as this low remains intact, we'll be looking for longs here. We'll be trading the range until eventually it's no longer holding. So this is where we are. We know that from weekly around the upper bound, we are a little bit away from it. So I don't want to be looking for shorts here, and we have these lows that might be holding it back. Instead, I'll be waiting for a break below it and then look for a sell on the retest. That's how you combine the weekly time frame, the big picture, with the structure from daily and H4. Or for them to be lining up, in this case, we need to see this movement, we'll be lining up with the upper bound of the weekly big picture and the structure here from H4 time frame. This would be an A setup, a very nice looking one. Next, if you zoom into lower time frames, you can see that previously the boost took over, we pushed higher and so on, and we are forming a very similar one. You can see a trend line here. It depends if you use trend lines or not, but you can see the previous major high is very clear right there. So as a confirmation for the bulls to take over, because you know the price can still break it down and push lower, so it doesn't really make sense to buy immediately. Always wait for extra confirmation before you go long or short or whatever you want to do. So I'm waiting personally for a break above this high. In this case, I'll be going for a long position right there. For the risk management, it depends if you want to go for the stop loss for the previous low and target 2R, or you want to make it a little bit smaller and target more, or if you want to target the upper bound of the range. It depends on your trading style. I don't want to go for a specific one. Of course, in the course, you get a detailed approach, but since you are here, you have a trading plan and you are trying to integrate something from it, then it depends on your risk management style. There is no one right way, as long as it suits you, as long as you've back tested it, and so on. So waiting for a break above this high, and then it is a confirmation that you can go long around the lower bound of the big range. This would be your confirmation on lower time frame on M30. And as you can see, as you already noticed, you can let me throw it. Perfect. The stop loss would be here below the previous low. For now, we might form a new low before breaking, right? In this case, you have to consider it the previous major low. And let's go for 2R as a basic approach for those who are watching. to have an edge over the market from a risk management perspective here as well, because from a technical perspective, we already have our edge, which is the lower bound of the range. That's it for today for this episode. Let me know in the comment section if you like the series for me to keep going and what you would like me to cover next. Best of luck, and I'll see you hopefully on the next one. And maybe next time I'll be zooming in even lower to M30, below M30 to M1 to M15, whatever time frame you would like.